What do you think here? It's the cloud stuff was holding up, the advertising wasn't, and the e-commerce business wasn't.
Yeah, good morning. I think we have a post-pandemic hangover. As Amazon described, you went from 20% to 40% growth overnight. Clearly, you can't automate deliveries of toilet paper and toothpaste, so they had to build out their physical network and double it. Employee count went to 1.6 million, double that number. And when things start to normalize, they can't pull back quite as quick on the throttle. The second factor you have is inflation, right? They're by far in tech, the biggest company that gets hit because of what we're seeing with expenses rising. So the good news is, you have the offset of the digital businesses with advertising as well as AWS, and the AWS business could be worth in our model, close to $1 trillion if you go out a couple of years. So, that's really the bright spot, and that keeps the lower margin retail business rolling. But in the short term, we have a buyer strike in tech across the board. The results have not been what anyone has wanted, and Amazon's not going to help, the tech trade at all at this point.
But what's in terms of a catalyst to move the ball? Is there a catalyst, or does the catalyst just have to be that all the multiples come down to a point where people say maybe this is cheap?
Yeah, multiple expansion, and then what most of our clients want to see is numbers get cut and the deck is cleared, and that they acknowledge that the economy is slowing. So many of the big institutional investors want a cut in the numbers. So the catalyst really is getting through this earnings season. I think ultimately companies acknowledging that there are many headwinds and putting in a more realistic number, and then that gets bought. Now that question is, most clients are believing that we are going to see a bigger recession in 23. And so I think most of our clients believe we have time on tech to buy it. So the catalyst really is not until the back half of the year, until they can start to see 23 numbers and believe that they have conviction. So right now there's not a lot of confidence. Having covered tech for 2 decades, I haven't seen it this cold in a long time. And the intention to buy is among one of the lowest I've seen in a decade.
Well, but that was the question, Brent. If everybody doesn't want to buy right now, does that mean it's a falling knife and you really shouldn't buy? Or is this the moment where you say to yourself, okay, if you think in 23 a recession is going to be here, in a weird way, at some point you need to always buy sort of before it all gets right, unless you think this is a recession that's a 5-year-long recession.
Exactly. It's a bullish sign given the lack of demand and given some of the cuts. And historically, that's the time to buy. I think everyone believes that we may have a couple of quarters of cuts. So the question is how deep are we going to go? And that may just take time. Some of the companies like Microsoft that have reported said no economic headwind. We don't see anything and still have it full throttle. Others are pulling back. And so I think this is just a quarter or two. And this is why you're seeing the volatility in tech, where we're seeing some of the numbers, the stocks come up, but then they sell off very quickly because there's just no conviction. And again, many of the top money managers we deal with, they're like, we're doing work on energy, airlines, opening trades. We're not doing work on tech. And that's a prevailing sentiment that we've been hearing for the last 2 weeks.